Some think this young woman's small tailor shop only works with cloth and thread. Little do they know, something greater is quietly being pieced together.
Thank you. Kongsi, kongsi. Bye-bye.
Girls, let's pack.
Boss, actually there's another job.
What? How can we finish it in time? Who is it for?
Oh, my best friend.
Boleh je. You go now and enjoy your reunion dinner. Go.
Go. You can come back tomorrow.
Silap-silap kita ni orang yang last kali rushing for Chinese New Year.
At least you got salary and job, ma. No complaint, lor.
Less talking. Faster finish this lah. And don't forget, once this is done, we still need a design that can represent all of us, you know. We can make it, right? It's Chinese New Year, you know. This is so heavy and muddy. Why do you always pick the lotus?
I remember when I was a young girl, my mom told me that the lotus is a lot like women. Kak Aini? Maru? Amay?
Bos, ingat tak masa tu? Ada tak mampu nak bayar rental rumah. Tapi you datang.
Why don't you come work with me?
You showed me how to live with dignity.
I telah cakap berapa kali, kerja diam-diam tak boleh bawa anak, Ma.
You can speak up for yourself.
There was a time I honestly didn't know how to continue living. It was you. You told me everything was going to be all right.
It'll be okay. Come, follow me.
And that has carried me until today.
We made it for you, the lotus. Because it was you who told us that
The lotus doesn't choose easy water to grow in.
Even when it grows from mud,
It keeps its beauty,
untouched
touched by what tries to hold it down.
It is you that reminded us, no matter how difficult things become, you don't lose who you are.
Thank you, everyone. In the end, the greatest wealth is knowing our true worth.
And that
Good evening, everyone. Welcome back to Morning Cup by 8. Aiman here. Right, so Okay, so if you look at the S&P 500, well, it rebounded to 6976 on Monday as Trump announced on the historic trade deal with India, cutting the tariff to 18% in exchange for India stopping for the Russian oil purchase, right? So, which also boosted the sentiment for the US exporters. However, I think the Bitcoin decoupled from the stocks and also dropped 2%. The crypto market is still suffering from the wash hangover. I fear that the new Fed chair will keep the interest rates high, which also hurt the non-yielding assets like the crypto and the gold as well, right? So I believe now the overall market are still in high volatility, as you can see here, which is the VIX index, right? It is still fluctuating between 20 to 16 within one trading session. So yeah, I think to expect a mix opening for today's session, while the US tech rally, the crash, decline, I would say decline lah, in the commodity and also the Bitcoin signals that the risk appetite is fractured, right? So however, we still keep our view that the 7,100 is still the immediate resistance, and if any further pullback to happen, the 6,950 may cap any further downside, right? So if you look at the China A50 futures, right, well, it closed lower on Monday session as the PMI fell to 49.3. Reigniting fears that the economic recovery is still stalling despite the recent policy support, right? So I think the index was further dragged down by the crash in the material stocks. Zijin Mining dropped by 5%. The CMOC group plunged after the global gold and also the copper prices collapse due to the surging US dollar, like what I mentioned just now. This was also triggered by the Trump nomination of the new Fed chair. So expect the selling pressure to persist today as the Fed hike on the telecoms add a new regulatory fears to the market, right? So if you look at these WTI futures, oil futures, right? Well, it plunged on Monday's session. As the war premium, evaporated instantly after the Trump stated that the Iran is engaging in serious talk, signaling the de-escalation of the conflict fears that drove the prices up last week. Now, if you look closely, right, I think the sell-off was deepened by the strong dollar and also the weak Chinese data, which signal the demand from the world's largest uh, importer is stalling, right? So uh, expect it to test the critical $60 psychological support. I think with the war stories that and this the dollar strong, right? I mean, the bulls have lost their catalyst ahead of the inventory data, right? So for the local market, for the Malaysia market, well, the KLCI rose on Friday session to close at 1740.88 points, right? As the local fund engaged in the window dressing to mark the end of January. I think which also aggressively buying the banking stocks, the Hong Leong, Maybank, CIMB, yeah, to set off the foreign selling, right? So if you look at the FKLI, well, it settled higher to close at 1737.5 points, but traded a slight discount to the cash market, which also signaling that the a strong month and buying towards the end of January last Friday, right? So I think technical wise, FKLI has shown the a strong resistance become support right here, which is a continuation formation, a trend pattern formation, um, which a positive signal for traders that trade FKLI, right? So I think despite the chaos in the regional side, we're still looking at our uh, local market, right? There's still bullish potential to propel higher if the positive sentiment by region remains. Also, yeah, if you see here, right? If you see here, the finance sector started to move recently, which seemed to be the top gainers as of last week, right? So yeah, in theory, after the finance sector move, right? So I think you guys can take a look at the telco sector as well. Um, as it acts as the laggard play to the financial sector move, right? So yeah, also I think people are now accumulating into the banking stocks as well, for the dividend payment in the following month. So yeah, maybe yeah, we can listen to David later on the banking sector updates. So yeah, last week we have issued a report on the IGB REIT, right? So now I put it to the REIT index side by side to compare. Now, if you see, the index has breakout higher, which is the lines, the uh, line chart, right? Breakout higher, while the IGB rate is still catching up. So I think the breakout is about to happen, and also if you see here, the stock has formed a continuation pattern, which is the resistance becomes support, and now targeting higher towards where we are looking at, which is the 3 ringgit 3 ringgit resistance level. Now, if this 3 ringgit resistance level able to breach or to break out higher, I think the stock may now propel towards the 3 ringgit 20 cent level, right? So keep an eye at this IGB REIT for a coming session. Also, for today's Malaysia trading stocks, right? So we have GDB Holdings. Okay, so the stock is on its breakout formation higher at this 41 cent level on strong volume. So with that, we expect the momentum to keep bullish and the stock able to propel higher towards the next resistance of 44 cent level and followed by 47 cent level. So if the stock to clear below the 38 cent support, I think this could reverse the course and the stock may trend lower. Also next we have Petronas Dagangan. So the stock is experiencing a breakout as well at 21 ringgit and 10 cents. So if the stock remain bullish, we are expecting the price to reach 22 ringgit 20 cent level in the coming session, together with the high volume second resistance at 23 ringgit 30 cent level, and also keep an eye at the 20 ringgit support for any attempt of reversal in coming session. Lastly, for the FCPO, well, it retreated on Friday session as traders locked in profit after the recent, I would say, straight up rally, right? Pressured by the stronger ringgit and also weakness in its rival, which is the soybean oil market. However, yeah, the downside was cushioned by the supportive export data. Also, there's this external report showing that the January export rose about 9 to 10%, confirming that the demand from the India, China remains healthy uh, to towards the festive season, right? So we still keep our positive bias unchanged for the FCPO. Higher for the 4,400 level, also at 4,500 level, and our stop loss remains capped at 4,100 level. So yeah, I think that's all I have for today. I'll stop here and pass the floor to the next presenter. Thank you, everyone. Happy trading.
Thanks, Aiman. Morning, everyone. So continuing on, today we have a report on the banks. This is the monthly statistical numbers that Bank Negara reports, and this is for the month of December. Now, system loans growth in December moderated to 4.8% year-on-year from 5.2% year-on-year in November. Household loans really was very steady. It grew at 5.3% year-on-year, but where the moderation came from was in the non-household segment, where loan growth there moderated to 4.1% year-on-year from 5% in November. We believe this possibly could be due to higher funds raised via capital markets, where we do note that there was a pickup in terms of bonds issuance during the month. In terms of the business pipeline, or rather the loan pipeline, full year loan applications and approvals rose by about 5% and 4% year-on-year respectively. But we do note that within the non-household segment again, loan applications were up 8% year-on-year. Approvals rose 6% year-on-year, but disbursements were actually down year-on-year. Hence, given the combination that you have healthy business loan pipeline, plus there was a delay in terms of the drawdown, we are expecting system loan growth to pick up in 2026 to about 5 to 5.5%. Deposits, there was also a bit of a positive news where it picked up pace to 3.4% year-on-year from 2.7% year-on-year in November. CASA continued to be the main driver of deposits, while fixed deposit growth was still quite muted at about 1 to 2% year-on-year, which could suggest that banks remain very disciplined in terms of the pricing for fixed deposits. With the pickup in terms of deposit growth, the system loan to deposit ratio ticked lower to 89% from 93% in November. And the last piece of metric is on asset quality, where we note that asset quality continued to improve, improving by 2% month-on-month, and is down about 0.5% year-on-year, with household as well as the non-household gross impaired loans down 3% month-on-month and 1.3% month-on-month respectively. With that, asset quality remains intact. We do think that allows room for banks to reverse out some of their provisions, release some of their provision buffers. And we do note that the system loan loss coverage declined to about 85% from 92% in December 2024. All in, we remain overweight on the banking sector. Our call is really premised on a combination of liquidity inflows, positive macroeconomic backdrop, improving earnings momentum, as well as attractive dividend yields. We have buy calls on Hong Leong, CIMB, Public, Maybank, as well as MPSB. Okay, that's all from me. I'll pass you to the next speaker, John. Over to you.
Thanks, David. So I have a result note for Westports following the fourth quarter and full year result released last week. Their full year earnings of 1 billion, up 12% year-on-year, are in line with our and Street full year estimate at 103%. The number is derived after we adjusted 381 million in their construction revenue, which reflected the ongoing Westport 2 expansion, their land reclamation activities, and a 10 million impairment loss on their trade receivables. So in terms of fourth quarter operational revenue, it came in at 680 million, up 2% Q-on-Q and 11% year-on-year, bringing the FY total numbers to 2.5 billion, up 12% year-on-year, and this is driven by a record high throughput. In terms of volume, Westport full year 25 throughput stood at 11.3 million TEUs, up 3.3% year-on-year, which is at 100% of our full year estimate. The growth was mainly driven by a 7% year-on-year rise in their transshipment volumes as a result of economic growth, but this was partially offset by a 1.8% year-on-year down in their gateway volumes due to the restriction of unauthorized inbound waste products. Looking ahead, we expect Westport's earning trajectory to remain robust, backed by a 10% tariff increase in January this year, and we anticipate both the gateway and transshipment segments will grow in tandem in 2026 as the loss related to inbound waste products, which is around 200,000 TEUs, was largely in the books by end of 2025. That said, we see no immediate headwinds for their cargo volume this year. As a result, we maintain our throughput growth forecast of 4.5%, aligning with our RHB Economics National GDP growth projection of 4.7% year-on-year. Given the inline results, we maintain our earnings forecast at a target price of 6.89 ringgit. I believe that's all from my side today. Thank you, everyone. Let me pass the floor to the next speaker.
Hi, morning everyone. Thank you, John. So today I'll have a report on TMK Chemical. Let me just share my screen first. Okay, yeah. So we have a non-rated report on TMK. First, quick background on TMK. It mainly in the manufacturing of basic chemicals, so namely your hydrochloric acid, your sulfuric acid, your caustic soda, and also your soda ash. But it's not in the petrochemical industry. So these products are mainly used in water treatment, semicon, gloves, etc. So there are three main investment theses for the MK. The first one is the Lynas expansion plan. So Lynas announced its plan to expand its processing facility by 50% for this year, and is expected for output to pick up in the second Q of this year. So as you know, to process these minerals, it requires a huge amount of chemicals, and this should benefit TMK. So TMK guided that only for hydrochloric acid, it could fetch them about 10 to 12 million of revenue per annum in the early stages. So to be able to fully capture this demand, the group is in the middle of completing its second manufacturing plant in Banting, which will be completed by the end of this year and is expected to double its capacity. So we highlight that this Banting plant is expected to cost about 120 million ringgit, which is way lower than their first plan of 280 million. So that's the first one. The second point is the lower cost from electricity savings. So we note that TMB has implemented its new tariff from July 2025 to December 2027. So this resulted in savings of about 700,000 per month. So if we annualize this, it's about 8.4 million ringgit. So this is about 6 to 7% of FY26 earnings. And this should also translate to better margins overall. So lastly is the overall positive outlook. So TMK mainly operates in three regions, which are Malaysia, Singapore, and Vietnam. So in Malaysia, gloves, semicons, and water treatments are TMK's top 10 largest customers, and our in-house estimates a 13% sales volume growth for 2026. And based on the back of the envelope calculation, this would translate to about 8 to 35 million revenue for TMK per annum, and this is assuming a 50% market share. So in Singapore as well, they also hold a 50% market share, and since electricity cost there is about double of Malaysia, so I think this would give huge cost advantage for TMK to be able to maintain their margins and also potentially try to undercut some of its peers. Yeah. So moving on to valuation basis. Yeah. So overall, we highlight that there are no direct peers for TMK other than Batu Kawan. So we try to look at the broader chemical industries, and also we compare to the overall KL Pro index. So based on this, we pack our valuation to 14 times FY27 PE, which is at a discount to KL Pro of about 16 times, and also Batu Kawan of about 16 to 17 times. Yeah, we believe that this discount is justified, given that first of all, KL Pro consists of other heavyweight stocks. So your press metal is there, your Sunway is there, your Solar Breast is also there. And Batu Kawan has a market cap of about 8 billion ringgit compared to TMK of about only 1.4 billion. So we believe that this discount is justified. So currently at FY26, at FY27 times, at FY27, the stock is currently trading at about 10 times, which is way below than its average of about 12 times. Yeah, so that is all from me. Thank you so much, everyone. Happy trading, and I'll see you tomorrow. Bye bye.